No, there was an immediate pop on the upside by the euro. There was an immediate rally in those equity markets. But there's still a lot to be done, is my understanding, from the finance ministers, from Moritz Kramer, over the next 72 hours.
Yeah, I think it's a very long, tortuous road, and I think it's by no means certain that the Greek parliament is going to approve the package, because it's significantly worse to what they said no just a few weeks ago. The cost of the delay has already been put by one of the EU officers between 20 and 30 billion euros, delaying it by 3 weeks. So I think the situation obviously is worsening, but the packages that's going to be put in front of the parliament is going to be significantly worse than what was there originally a few weeks ago, which means that, we're going to have great political uncertainties until that vote is, done.
And if he manages to get it through, Tsipras, we're writing up our story this morning as a complete capitulation for Tsipras, as you say, accepting more austerity than perhaps would have originally been in the first place. He has capitulated. Can you envisage that he's going to have to call elections to actually renew his mandate to implement?
I think that's almost inevitable, because there's going to be a lot of, repercussions within his own party, and of course some of the other allies who are supporting him may decide not to. But I think the more important point, all of this, was this 50 billion euro fund.
Right.
And it's difficult to see, how that is going to be satisfied in the short term, in terms of which assets...
Is that just another one of these European mirages, a dreamt-up formula for a dreamt-up solution because they couldn't find a proper solution?
Well, almost, but because if you look at the reality of 1% of the GDP, you're talking about numbers which are just practically not feasible. So again, you have a hurdle which has been put in front of the Greek parliament and the Greek people, which they're unlikely to be able to meet for a while yet. Yes, they can nominate a whole set of assets which, will hypothetically be privatized and moved into the fund.
Yeah.
But I think the value of those assets are going to be quite problematic, given that the recession for now is worsening and the banking system remains closed. So it depends on when the banks are going to be recapitalized in order for the value creation process to start. So these privatized assets effectively are worth what they're supposed to be really worth genuinely.
Well, then there's the whole debate about recapitalising the banks. Angela Merkel says 25 billion euros. Will there be 4? Will there be 2? One of the finance ministers I spoke to this morning, there will be no bail-in. Excuse me, no bail-in in regards to depositors.
Yeah.
I need to be clear on that. Look, take all of this for me, because we've had the best quarter since 1998, the first quarter in European equities. It was bravissimo arrival of QE. The markets marched ahead. We're in correction territory in a lot of these markets. Would you buy European equities now if this deal goes through on Wednesday?
I think it's getting to a stage where one begins to get excited and interested, but I think we need to wait until middle of the week for more uncertainties to be removed off the table. But effectively, the QE is doing its job by bringing the cost of capital down across the board for SMEs and their households, and the new mortgages rates are coming down. This means that the economic growth rate that we are now beginning to see in Europe is a lot more sustainable.
The IMF actually keeps their growth rate. They downgrade America and they downgrade China, but they actually keep European growth rates, I think it's I need to double-check, 1.5, 1.7%.
Yeah, and that's a very realistic territory, with the short-term rate probably running around 2% before it comes down. But if the cost of capital stays down, then effectively, what you've done is to stabilize the housing market. You stabilize in the banking sector effectively by making sure that the non-performing loans go down much more faster, and the non-performing loan cycle is pushed further out in the future, which means that the banks will feel more comfortable lending, which is effectively what will create the growth. The consumer spending is already rising on the back of the fall in the oil price, and you've got exports which are still doing reasonably well, with the earlier fall of the euro still feeding through. So I think there are cyclical things right now, but there are structural changes taking place which gives you more comfort that the QE is slowly beginning to have its effect, and it's going to run on for some time to come, because we're not going to get to 2% inflation for
quite a while.
Well, yeah, for probably well into 2017. So that means that, you're again into a situation where the liquidity keeps coming in, and that's going to help buoy the risk markets in any case. But I think the corporate earnings cycle could be a lot better than it's been discounted by the marketplace, which means that, in time the ratings will come down. So yes, you had a huge rally in the first quarter. A lot of it was preempting a lot of the corporate earnings over the next year or 2 years. And now we've had a lot of correction because the short-term money's come out. And I think it's time to now seriously go back and start doing the due diligence in terms of, what one should be looking to add to one's portfolio.
And if you had to make a top call on what to add to your portfolio, what would that be if everything lines up?
I'm still very convinced with the large cap exporters. I'm still convinced with the large cap domestic players, with strong balances, because they are the ones who are going to continue to capitalize in the environment that we see in the next year.